Welcome everyone to the Kindle Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, I want to start off by thanking everybody that came to the live stream yesterday. I went through a lot of details that I would suggest that you go back and watch at least the first hour. There's a lot of elements there that will help you to understand further in depth of what I'm thinking is going on in the markets. So go ahead and watch that. We have tagged the timeline so you know exactly what I was discussing at different points in the video so you can scrub along. But as we go into Thursday, where this is a big part of the week, it's been the primary thing that folks have been watching, is that we're seeing the continuing claims come out, and the claims are expected to show 730 new claims, and the continuing claims came in at 4.12 last week. But my expectation is that we're going to come in under 4 million. And I've been talking about this number for a while, and I think that will be significant. As we look back on yesterday's action, we saw the markets responding quite well, and the S&P was up 0.8 but finished down 0.7, so a complete reversal as the markets unfolded during the session. The NASDAQ was down 2% and the Russel down 2.4, so there's still a lot of rotation going on. I've talked about this over the last several days, that I believe that the markets are going to remain very choppy, and I don't see any breakout, anything that's likely to happen on the upside. If anything, we're seeing more downside risk. In a few minutes, I'll talk about the database, and we saw another 1,211 sell signals and 130 buy signals. So this is also a negative rotation, and the database has moved down to around 15%. I'll go through these details in a minute. But as we look at the technicals, I mentioned in last night's video that we're going to challenge some of the key support levels. It looks like that's still in play, even though we're seeing some strength overnight. The markets are rebounding primarily because oil has softened a little bit after the big blockage at the Suez Canal yesterday. Got the markets very excited about the disruption of oil tankers and other things that were going to affect the oil market. It was a temporary glitch, and markets are coming back in. We also saw yesterday that the 10-year continues to come back in. There was a 5-year auction yesterday. It had good coverage, went pretty well for the most part, but I think most of these scenarios that we're seeing here that are coming out of the interest rate markets are going to continue to be somewhat tenuous, as market participants are very nervous about what's going on. So as we come into the end of the week, the claims will be big. I think there's going to be some challenges on the support levels. If they hold, we'll be able to get back above this 3,900 level, maybe set up a more positive tone. But everything is turning south, as you'll see, and when I go through the technicals here in a few minutes. Just one last mention, we do have GDP coming out today, and that's going to be a non-event. It's expected to show 4.1%. It's actually the third revision of GDP, so it's really not relevant at all. So let's go ahead and take a look at the charts, see what they're telling us for Thursday. As I review the WaveTech database, as I mentioned earlier, we did see 1,211 new sell signals and 130 buy signals. You can see that the percent bullish now has moved down to 15.47. I mentioned once we get through that 22% level, we're going to get into what I call a full liquidation. And that in June of last year, we went down to roughly 8% bullish before the market turned back up. So typically when we get here, it's like an overbought, oversold type situation. Markets are getting fairly oversold here. That's why I'm continuing to expect the support levels to hold. I'm going to reference several times as I do the video tonight the live stream, so I am going to reference that so that you're going to need to go back and watch some things if you want in depth. I typically do a abbreviated version of the daily commentary after the live stream, so make sure you go back and watch some of those things. But I went through a lot of detail talking about the database and other things on that broadcast. As we review the S&P futures, they are up 9 handles right now, 38.89. As I mentioned in the opening comments, we're going to test some of these key levels. 3878 is the 21-period moving average. 3870 is the 40-day moving average. These are key pivot numbers in this pattern. These levels are likely to hold, but if we close below them, we'll be looking at the weekly charts, and I'll cover that in the SPX in a minute. But as we look at the market grid for today, S1 is 3868. Overnight, we've had a 3877 low. So an S1 would be a test of that 40-period moving average at 3870. On the upside, 3893 is R1. We've already penetrated that, so we're looking at least going back above 3900, hitting 3907, and the extreme would be an R3. In yesterday's action, we actually saw a pretty substantial move. I just want to go back and review that for a second. We did almost reach an R3 yesterday, 39.39, and the market reversed and traded down toward the S2 number, which was 38.73. So the volatility has continued to stay high, as we saw nearly an R3 S2 range yesterday. As we go back to the grid for today, looking for an S1 R2 range for the day, and just use these numbers as a pivot. Now, if we take out S1, then that would suggest we'd have R1 S2 range. So those are pivot numbers. R1 S1 will be the pivot numbers for today. As we look at the SPX, we did trade right up to the moving average yesterday. We traded into just about an R3, which was 39.49 yesterday. The high was 39.42. Market reversed and traded down to 38.89, which was almost an exact hit on the S2, which was 38.88. As we look at the grid for today, the expectations are for an S1 R2, which would be 38.77, 39.12. It looks like we're going to try to come in a little stronger in the morning. We'll see if this holds up. S1 and R1 will be the pivot numbers in these patterns. So break over 3,900 on the cash will set tone for an R2 move, possibility of an R3. But if we take out S1 first, then we could see a move down to that 38.65. And just going back to the moving averages here, a move down to 38.65 would be a penetration of 40-period moving average, which would suggest a potential further risk in this market. Now, when we look at the PPMs, they are completely flat. So there's no, typically when I talk about the PPMs, there's an upward movement or a downward movement. We're basically flat across the board. PPM1 is a 0.02, PPM2 0.095, and 0.02 on the PPM3, so we really have to go to the weekly charts to actually come up with some sort of expectation for today. And I went through a lot of detail in the live stream. This 38.68 is the 10-week moving average. That should be substantial support. We're at a plus 0.31 on PPM1. That suggests that there's only a 40% probability to get through that level on a weekly close. So look for a bounce off of there. Also remember to watch the coverage on the S&P on the live stream yesterday. Next market I'll cover is the NASDAQ. PPMs continue to roll over, but they're not in a downtrend mode. They're very close. PPM1 is a minus 0.17, minus 0.18 on PPM2, and minus 0.05, but they are all exerting some downward pressure here, which suggests that there's going to be substantial resistance around the 12,870 level on the 21-period moving average, and then at the 10-day moving average is going to be 12,963. As we look at the market grid, that maps out fairly good to the resistance at R1, R2 on the upside. S1 is 12,721, so we haven't quite reached there overnight. But the vulnerability here on this market is to continue to move down in this pattern just because of the configuration on the PPMs. Now this is interesting because the NASDAQ has a slightly more negative profile than the S&P does. So we'll see how this thing plays out. In the last couple of days, the NASDAQ's action, both on the upside and downside, have kind of been the main influencer from the standpoint of market trends intraday. So that was definitely the case yesterday because it just started to sell off, and of course the Russell went with it. The next market I'll cover is the Russell. Russell was down 2.35% yesterday. We did get all the way down to the STX number. We saw the move down on the low to 2134, STX 2127, so we went right to that. We did not penetrate it, but as we look at the market grid for today, we're looking at the potential for an S1 of 2117. The Russell futures are up about 0.69, so it looks like we're going to attempt to support a little bit and see some sort of rebound, just like with the other indices. But at the moment, it looks like it's going to claw back against the NASDAQ, as the pattern, at least for the day, is looking like it's trying to get back into some of the weekly support numbers. We look at the weekly chart briefly, and you'll see that we went down to the weekly STX 2131, low 2134. So we've hit the extreme. The PPMs are still very positive. I went through a lot of detail on the live stream, so go back and watch that coverage on the Russell for more details on this market. But we are at the extreme for the week, so this suggests we're likely to see some rebound from here. If we do continue to go down, I'll cover this on tomorrow night's video. But if we close below the 2131 level, then that's going to be a weekly STX buy signal, which suggests that we'll come back into the pattern. Make sure you watch the coverage in the live stream. The next market I'll cover is gold. Watching gold has been like watching paint dry. We've just been in this sideways mode for about 8 to 10 sessions now. We continue to hover right around this 1730 level. The 10-day moving average 1731, 21, 1725. And I've been talking about this for a while, but I still expect to see this market try to move higher in this pattern. The PPMs are all starting to turn up on a daily basis, so there's going to continue to be a slight upside bias on this market as we go forward. There's really not much more there. There's really not much more to talk about on this market. I would go in and watch the coverage because I covered the long-term trends both on gold and silver. So make sure you watch that. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.